All right, hello and welcome to Performance Analytics Corporation's demonstration of our OneStream CPM Foundation application. Our application is a comprehensive consolidation system. However, for the purposes of this demonstration, we're going to focus on Performance Analytics Corporation's in-house designed value-added functionalities. And this presentation will be aimed at our fellow OneStream implementers and consultants. The solutions addressed in this demonstration are based on our key takeaways from our prior OneStream implementations. So without further ado, let's jump right into our agenda to see what we'll be covering today in our session. We'll start with our multi-year ends topic, cases where not all entities within our corporation share the same fiscal year end and how our application deals with such scenario. Moving on to our currency conversion functionality, where we look at our currency conversion capabilities for both FCT and PCT methods of translation, and our ability to address and manage CTA-related issues. Next, we'll talk about profit and loss statements by nature and by function. I'll walk through how our statements get efficiently mapped from profit and loss by nature to profit and loss by function with full transparency and reconciliation. We'll also briefly touch on our cash flow mapping, which is a separate instance of the same rules engine that is used by the profit and loss by nature and by function capabilities. We'll briefly take a look at how trial balance activities mapped into cash flow lines using the same scalable rules engine. That will be followed by our journals capability. I'll show how journals can recur, reverse, and roll forward automatically without cluttering periods or copied entries. We'll then address confirmation rules. We'll review how data validation rules are standardized and maintained centrally to ensure consistency and control, all while requiring a very minimal amount of code in the application. Following that, we will highlight our UDA developments. I'll highlight how metadata properties are surfaced directly in the cube views to improve visibility and reporting usability. And we'll wrap things up by talking about our TPM, which is our text property manager. I'll show how all text field properties are centrally governed to ensure consistency, documentation, and long-term maintainability. With that, let's jump into our first topic, which is multi-year ends. As you're aware that not all entities within a corporation share a common fiscal year end. Some entities may need to report to local authorities using different fiscal year end than the one that corporate uses. Newly acquired entities may have been using a different fiscal year end that might not be desirable to convert right away to the corporate fiscal year end. In our CPM Foundation application, we have designed our consolidation system to allow local entities to load, adjust, and report using their local fiscal year end in OneStream. As part of processing their local fiscal year end data, OneStream will convert the local fiscal year end data to the corporate fiscal year end cubes, so the same financial data can now be viewed relative to either fiscal year ends. Each entity can have its own fiscal year end. Entities that already utilize or have converted to the corporate fiscal year end will load, adjust, and report their data directly into the corporate fiscal year end cubes. The benefits to this: source data does not need to be manually converted outside of OneStream to conform to corporate fiscal year end. Let's take a look at what this might look like in the application. There are cases where different entities operate under different fiscal years. In such scenarios, it becomes necessary to convert all data into unified fiscal year, typically the one used at the corporate level, to ensure that financial information is aligned under a single fiscal calendar and can be accurately reported. In our CPM application, the top-level corporate cube has a fiscal year ending in December. However, there are entities that operate in March year-end, so the data that is loaded in the March year-end cubes gets copied over to the December year-end cubes, and the workflows for the two corresponding entities are synchronized. If you take a look over here, we're seeing the workflow profile for the March year-end. And in the text one property, you can see a defined property that synchronizes the workflow period for the same entity, one under the March year-end, the other one under December year-end, And once the entity period is processed in the March year-end cube, the the data gets copied over to the December year-end cube, and the workflows are synchronized. Let's take a look at what that might look like in action. Here we have a holdco entity for the March year-end, where for the purposes of this demonstration, we have already loaded some data. Let's go ahead and process this cube and see what exactly occurs on the December year-end side of the equation. Once our March year-end cube has been processed, we'll quickly go over our confirmation rules to see that their data is error-free, that's just been loaded into the application. And once this period has been processed, if we go over to our December year-end cube for the same entity, for the same period, you will notice that the workflow has been synchronized as the workflow was processed and the data was copied over to the December year-end cube. Now let's take a look at what the two might look like side by side. Here in our CPM Foundation's dashboard, we have a screen where you can see two distinct cube views. The cube view on top shows the March year-end cube, whereas the cube view on the bottom shows the December year-end cube. I would like to point your attention to the same month for the two cubes. In the top cube, where the 10th period is January 2025, you can see that we have beginning balances, activity, and ending balances listed for the total assets. Whereas on the bottom, we can see that January 2025 in the December year-end cube is the first period of that corresponding year. You'll notice there's a difference between the beginning balance, which arises due to the year-end rolls. However, the ending balance on the both sides ties out to be the same. This is corresponding to January 2025, February 2025, March 2025, and so on. Let's take a look also at the income statement accounts. On the income statement account side, you will notice that the ending balances for the same periods differ. That is because there's a accumulation of a different span of months because we are viewing this in the year-to-date view. However, let's take a look at what this might look like if we switch it to a periodic view. Let's go back to our income statement accounts. If we go back to our income statement accounts under the periodic view, you will notice that the data for the corresponding months has been copied over effectively and efficiently and is the same. As I mentioned earlier, under the year-to-date view, the amounts differ due to accumulating a different span of months. With that, let's move over to our next topic, which is currency conversion. But before that, I would also like to show you an illustration of what the year-end cubes might look like. Here you can see the automated data copying after the cube has been processed for a particular period. Let's move over to currency conversion. OneStream standard currency conversion provides all the tools one needs to perform any sort of translation desired. However, one needs to build logic to perform the specific currency conversion required for any given customer. Computing CTA here gets a bit more complicated, causing some implementers to simply plug the out-of-balance balance sheet amounts to the CTA account. The CPM Foundation solution is that we provide a property-based solution to handle the most common sorts of currency conversion for FCT and PCT types of translation. The accounts and profit and loss statements are translated using average rates, whereas the balance sheet accounts are translated using ending and historical rates. The solution also allows dollar or rate overrides, which can be optionally applied to individual activity. Additionally, rate types such as trailing average can be developed and bolted in as necessary. CTA is fully computed and automatically captured within the account and as necessary to the balance sheet CTA or the profit and loss CTA expense account. The solution also allows us to track CTA effectively to see from what source accounts that CTA was generated from. The benefits to this: currency conversion and CTA calculations generally require no development. It's simply a matter of assigning the FX type property to the entities and the rate type properties to the accounts. Being entirely property based, currency conversion can vary by scenario type or even time, which allows us to support different reporting standards such as IFRS, ASPE, and US GAAP within the same application, where currency conversion may need to differ by a different accounting standard. Now let's jump back into OneStream and see what some of these properties look like in the application. Here you can see a grid view of our entity dimension. Here we have different entities defined in our application. And if you take a look at the text one property, you will see a property called FX type. FX type determines the method of translation, either PCT or FCT, but that will be followed by this particular entity. This property is assigned to the entities in the application. Here you can see that for entities following a PCT method of translation, the FX type has been assigned as PCT, whereas entities following an FCT type of translation have been assigned FX type as FCT. Let's jump over to our second property relevant to currency conversion, which is the rate type. Rate type is a property assigned to the account dimension. Rate type determines how an account is translated and what translation rate it will be using. So for example, if we take a look at some of our equity accounts which have been assigned the rate type as HISFLOW, that means that this particular account will be translated at a historical rate. Let's jump over and take a look at our translation cube view, where you will get an overview of what the CTA calculations look like in the application. This is our currency conversion translation cube view. This cube view has been color coded for your ease of understanding. In green, you will see the applicable FX rates, values that are taken directly from the FX rate table in the system. Here we have closing rates, average rates that are showed from respective periods. In yellow, we have the two properties that we discussed earlier, the rate FX type property for the entity. Here we have the method selected to be FCT, so you can see that the FX type defined as FCT, and we have the account property rate type, which determines how an account is translated. Here in the orange, we have translated data by account, flow, and time. And last but certainly not the least, we have our blue column, which is the CTA by source account, which is taken to the balance sheet CTA or the profit and loss CTA accounts. The benefit of this procedure is that only the entities and account properties need to be entered in these dimensions, which makes the translation functional. This last column right here in blue gives you a better idea of how CTA is being computed to the CTA balance sheet and P&L accounts, so users can easily track CTA composition and reconcile efficiently. Here in the bottom row, you can see that the balance sheet accounts are 0, which means that the calculated CTA offsets the translation differences and the balance sheet is in harmony. If we switch over to the PCT side of the equation, the cube view looks exactly the same, with the color codes conveying the same amount of information. Here you can see that the FX type has now been changed to PCT. We have our CTA in blue. We have the translated data in orange. And all you can again see that the bottom rows for balance sheet are all in 0, which means that the calculated CTA offsets the translation differences and the balance sheet is balanced. Let's move over to our dollar overrides. Our dollar overrides are defined in our UDA dimension. For Canadian and US dollar overrides, there are specific members in the UDA dimension where Canadian dollars and US dollar values are calculated directly, either at nominal values or using rate overrides. These calculations are executed as a part of the cube processing routines. If needed, Users can manually override how a particular set of activity is being translated. Let's move on to the next topic. Profit and loss by nature and by function. IFRS reporting often requires the P&L to be reported by nature and by function. A P&L by nature lists expense by type, showing what was spent, while a P&L by function groups them by purpose, showing why it was spent. While it is possible to report on a combination of accounts and departments in a cube, it becomes tedious and problematic if multiple lines of combinations need to be reported, or there are multiple different reports that need to obtain the same combinations. Ad hoc reporting in this case also becomes more difficult as each user needs to understand what intersection of account and department they need to obtain for a given reporting line. Our CPM Foundation solution to this is that we include a rules engine that can be utilized to very efficiently copy source data from one schedule to another in an orderly manner. This rules engine is property-based, such that all formulas exist in text 1 properties and can be maintained and viewed without knowing how to read or write a business rule. The formulas can add or subtract multiple intersections. The rules engine also provides various diagnostic reports so one can figure out how the source data was actually mapped and what source data may not have been mapped. This is especially handy when complex formulas or solve orders are utilized to solve overlapping formulas. The benefits to this is that the rules engine is very efficient. It applies all formulas in a single pass through the source data and provides various diagnostic tools to understand how data did or did not get mapped. Administrators and finance users usually have no difficulty understanding, maintaining the property-based formulas. Let's jump back into the application and take a look at our account dimension. In our account dimension, you will see that there are two profit and loss structures. One is the profit and loss by nature, and the other is the profit and loss by function. The profit and loss by function hierarchy contains the accounts that will receive the mapping, whereas the profit and loss by nature hierarchy contains the base P&L accounts that will receive the balances from the source system. Let's take a deeper look at our properties in the P&L by function hierarchy. In the P&L by function hierarchy, our text properties contain two key properties. One being func.pl solve order, which defines the mapping priority order, and the second being func.pl source intersection, which specifies the source intersection to be mapped, typically including a P&L by nature account, along with any additional dimensional intersections that need to be referenced. I mentioned a diagnostic tool that is available to see what has been mapped and what has not been mapped. Let's take a look at what that might look like. Before that, let's also take a look at what these reports might look like on the side by side. Here we have a profit and loss by nature and profit and loss by function, where you can see that despite the expenses being classified differently, we have our profit and loss before tax for both the reports tying up, along with the income and loss from continuing operations and ending with the same net income for both. Let's jump over to the diagnostic side of the report. Here we have a functional P&L validation report. If eventually the income statement by nature does not tie to the income statement by function, this report shows what data is not being mapped or double counted and why. So it's easier with this report to diagnose the pain points of the functional P&L mapping and see what needs to be corrected. In this diagnostic report, you will see that the source accounts and UD2 information is defined in the rows, whereas the destination accounts have been defined in the columns. If you scroll all the way down, you will see that the last row, which is the total for the operating profit and loss for the by nature hierarchy, there's a none column. This is all the data that has been pulled in from the source data. The none column should always tie over to the mapped column. That would mean that everything from the source data has been mapped to the destination data, to the destination accounts. In case they don't, an unmapped column will appear showing the mappings that need to be reviewed by every single account. Let's drill down on one of these to see what they might look like under the hood. Here you can see all the source data that has been mapped to a particular destination. Let's move on to our next topic, which is cash flow mapping. As you know, there is a need to be able to map a combination of account and flow dimensions and some other dimensions of the trial balance data to individual cash flow lines. Our CPM Foundation solution follows a different instance of the same rules engine as the one used by our P&L by function and P&L by nature mappings. Opening cash can be computed with the rules engine, and if users need to be able to select whether to view the cash flow by periodic, quarter to date, or year to date, then there's one base account needs to be computed dynamically, along with the cash flow parents. As mentioned, the rules engine can be utilized to efficiently copy source data from one schedule to another in an orderly manner. This rules engine is also property-based, such that all formulas exist in text properties and can be maintained and viewed without having know-how of how to write or read business rules. We also provide a diagnostic report with our cash flow mapping, which works very similar to the one that we provide with our profit and loss for by nature and by function, which also helps us review the mappings. Since this is the same rules engine used, it's very efficient and applies all formulas in a single pass through the source data. Let's take a look at in the application what the cash flow accounts properties might look like in the text one. Here you can see that in our cash flow hierarchy, we have a cash flow source intersection property that defines the account from the balance sheet or the trial balance, which is being mapped to this particular cash flow account. Let's jump over to our diagnostic report for the cash flow mappings. Here you can see that very similar to our diagnostic report for the functional P&L. In the row side, we have our source accounts, whereas on the columns, we have our destination accounts. You can see that for the none is all the source data that has been brought into the system. And at the end, we have our mapped and unmapped columns, which shows what has been mapped and what has not been mapped from the source data to the destination accounts. Now let's drill down to one of these as well. Just as on the functional P&L side, here you can see all the source data that has been mapped to the destination accounts for this particular instance. Let's jump over to our next topic, journals. OneStream provides a means to create, post, or unpost journals that updates the cubes. However, OneStream does not provide any standard functionality to roll journals. If OneStream journals are to be rolled, most OneStream implementers will copy the journals from the prior months of the year to the current month and post them in the current month along with any current month journals. For customers making lots of adjusting entries, this can result in thousands of journals being posted each month by the time you get to the last period. And it makes it difficult for the users to isolate the real current month journals that they posted. Imagine if an ERP system was operating this way. If a prior period journal needs to be modified, then the updated journal needs to update the copies of the journal throughout to the end of the year. The CPM Foundation application, we provide a rich set of journal rolling functionality using the UD1 dimension. This dimension is based on text properties and can help identify the following. The journal recurrence. There are multiple types of journal recurrences in the application. Temporary, permanent, monthly, quarterly, half-yearly, yearly, or a custom month filter. This basically describes on what time periods the journal is to be entered or posted. Permanent journals can be entered in any month and they roll forward. Temporary journals, on the other hand, can also be entered in any month, but they do not roll at the end of the recurrence. Next is reversing or non-reversing journals. It can also help identify if the journal is to reverse or not at the completion of the recurrence. This applies only to monthly, quarterly, and half-yearly journals. Non-reversing journals, which is their default behavior, effectively behave as permanent journals, but have a prescribed frequency of being entered. Reversing journals, on the other hand, will drop off at the end of the recurrence. As an example, a reversing quarterly journal will roll over for the next 2 months, but will drop its data at the end of that particular recurrence. Journals that are entered or roll into month 12 will automatically become permanent as a result of the year-end roll. Temporary journals entered in month 12 will automatically generate a year-end roll, adjusting reversing entry in month 1 of the following year to reverse the normal year-end roll logic. We also provide a validation report to identify any UD1-based journal properties that are inconsistent with that of the journal template properties. Journals are posted to UD8 hash journals, which is not included in the normal reporting, to maintain OneStream journal integrity and drill back to source capabilities. The journal logic then copies and rolls the journal data to UD8 hash none, which is included in the normal reporting. The benefits to this: the actual journals do not need to be copied or reposted in subsequent periods to simulate journal rollings. Thus, users do not need to sift through the journals that were copied from the prior months of the year in order to see the journals that they entered this month. Now let's jump into the application and look at some of the properties of our UD1 dimension journals. First, here you can see all the journals that have been defined in our UD1 dimension. Let's mull over the grid view and take a look at the text and properties that are defined. If you take a look at the text and properties for this corresponding journal, the local income tax, you can see that there is a property named journal currency. This specifies if the journal has a currency different than the local currency. Then we have journal recur, which is assigned to base UD1 members that are used for journals, defining the type and recurring of the journal. For recurring journals, time periods are always relative to the source cube journal was entered in. This property can be permanent, temporary, monthly, quarterly, half-yearly, yearly, or as you can see here, a custom month filter can also be used. Next, we have the journal reverse property. This is also assigned to the base UD1 members that are used for journals, defining whether the recurring journal balances are to continue to the end of the year or drop off at the end of the recurrence period. No is the default property for the journal reverse property. Recurring journal balances under this will roll to the end of the year, behaving like journal recur is equals permanent, other than the predefined posting periods. On the other hand, if the journal reverse has been defined as yes, the recurring journal balances will end at the end of each recurrence. With that, we also have a few additional optional properties, such as journal start or journal end, which define a time period out of which any journals that are posted out of that time range are to be ignored. All journals except temporary will roll from month 12 to month 1 of the next year and become permanent. As mentioned, temporary will drop off the next period. A temporary in month 12 will have a reverse post on month 1 of the next year, so no effects are yielded on year-end rolls. Let's take a look at our journals report. Before we move ahead, I would like to define what you are looking here at in the journals report. On the row side, you can see the defined journals, and on the column side, you can see that in the initial columns are the properties defined for those particular journal templates. You can see the journal recurrence and the reversal properties. You can also see periods defined with UDA journal and with UDA none. The UDA journal is the amount that has been entered in the current period for a particular journal, whereas the UDA none is the rolling forward or the carrying forward amount. Let's pick on two examples. One where a journal reverses and one where a journal does not reverse. Let's start with this. Local income tax quarter to date journal. This journal recurs quarterly and does not reverse at the end of the period. What you will see here is that, as an example, we added $50 to the third month of the 2025 for this particular journal. You can see that that $50 rolls over to the next 2 months until the end of the quarter. And at the beginning of the next quarter, when we add an additional $45, the roll has now accumulated to 95. Because this was a non-reversing journal, the carrying amounts from the previous quarter have been added to the new amounts added in the beginning of this quarter, which carry on until the end of this quarter as well. On the other side, if we have a reversing journal, you will notice that we added an exemplary amount of $20 in the third month of 2025, which rolls over to the next two periods until the end of the recurrence. However, at the beginning of the next period, when we add an additional $15, we see that now the carrying forward amount is only 15 because the amount from the previous quarter was dropped off at the end of that recurrence due to this defined property of journal reversal. At the bottom of the screen, you will see two distinct lines. For the given accounts, we have the line before ADJ, which is before the journal takes effect, and we have the line after ADJ, which is after the journal has taken effect. So based on the accumulation and posting of the journals, you can see that those totals are either added or subtracted from our before ADJ amounts, and you can see the totals after the journal has taken effect. Let's move on to our next topic, which is confirmation rules. Each confirmation rule in OneStream requires business rule logic to be written. At most implementations, developers write a 20 to 50 or even more lines of code under the business rule function for each confirmation rule. It is not uncommon to have more than 100 confirmation rules in a single working application, which results in a very large and tedious logic file that becomes difficult to track and maintain. In our CPM Foundation solution, we provide a set of standard confirmation rules oriented function that allows approximately 90 to 95% of confirmation rules to be written using only 2 lines of code. One only needs to build unique confirmation rules function for the remaining 5 to 10% of the peculiar confirmation rules for specific needs. Where, let's say, for example, you need to check the contents of a transactional table. The benefits of this: confirmation rules require less technical skills to develop, maintain, or understand. There is a less chance of introducing errors, as about all that is being specified for each rule is the mathematical intersection that needs to be checked. And as mentioned, 2 lines of code are a lot better than writing 50 lines of code. Now let's take a look at what the confirmation rules might look like to an end user's perspective. We'll go back to the entity where we showed you our multi-year ends capabilities. On this screen, you can see that these are the rules that are used to ensure that the data being loaded into the cube is consistent with the defined validation logic. Some of the key checks include verifying that the account balance is properly reconciled across beginning balance, activity, and ending balance. As an example, it can help us confirm that the profit and loss by nature matches the profit and loss by function, which ensures that all balances have been correctly mapped. Additionally, additional validation rules can also be applied. Now I'm going to pick on this particular validation rule, and let's see what this looks like in our business rules component. The confirmation rule we have here is check underscore I underscore comprehensive income. If we go over to our business rules defined in the application, you will notice that, as I mentioned before, only 2 lines of code are required to build this particular business rule. Everything is managed from a single function, and all that is being specified for each rule is simply the mathematical intersection that needs to be checked. Let's move on to our UDA definitions. OneStream does not provide predefined dynamic members to surface metadata member properties into cube views. The result is that during an implementation, developers will randomly create such members with inconsistent naming conventions as they require such members, or live without trying to integrate the property values into cube views altogether. The result is an inconsistent medley that often differs even within applications or environments within the same customer implementation. In our CPM Foundation application, we have created a standard set of dynamic UDA members to surface virtually all metadata properties with a consistent naming convention. We even surface each of the text property manager managed name value pairs properties that are stored in the text field properties. We will talk more about our text property manager in the next section. The benefits to this is that with developers now being able to count on having predictably named dynamic members for all metadata properties, such properties are much more readily included in the cube views and can be counted on being there when a cube view is copied between apps or environments. Let's take a look at what our UDA definition looks like in the application. If I go over to our UDA dimension, you can see that here in the UDA dimension, we have our predefined dynamic members to surface metadata properties into the cube views. Let's take a look at these account text properties. Here we have all the text properties that one might choose to define in an account. Let's take a look at what this might look like if it's surfaced in a cube view or a report. Here in this report, you will find the predefined dynamic members that have been defined in the UDA dimension being used in a report. The account text properties defined in our UDA dimension are being used here, and properties such as functional P&L inter-source intersection or the functional P&L solve order are being used effectively and efficiently in a cube view with consistent results. This will allow this cube view to be copied over between environments without losing its functionality. Let's move on to our next topic, our last topic for today, the text property manager. OneStream does not provide any out-of-the-box solution for managing the use of metadata, workflow, security, or workspace-related text 1 to text 8 properties, resulting in developers and administrators not knowing how text field properties are being used, and it can also lead to the use of inconsistent text field properties. In our CPM Foundation app, we have a two-part solution. First, we utilize delimited name value pairs within all text field properties. So for example, in a given text1 field, You could define your report filter, your rate type, and your functional P&L source intersection, in which you can stack multiple different pieces of information into a single text field property. Here, the property name of each piece of information offers a clue as to what the value represents and what it might be used for. We provide common utilities that will parse out and return the value for a given property name. The second part of the solution is that we utilize a text property manager, which allows us to centrally manage text property name, identifying in what text field the dimension/property name is to be used. All logic, reports, or otherwise that utilize text field property name value pairs go through the text property manager to determine which text field to find the property name in. The TPM solution offers validation reports to identify when somebody accidentally adds a property name to an incorrect dimension or text field property. The TPM also offers utilities to assist in relocating name value pairs to different text field properties in case they need to be moved. Text Property Manager provides a comprehensive information sheet, as in what the property is used by, how it should be set, and what valid values mean. The benefits to this: between the combination of using delimited name value pairs and the Text Property Manager, we have a very robust way of managing custom text field properties that documents properties, minimizes errors, allows virtually an infinite number of text field properties to be assigned, assists in moving properties around if needed, and also allows us to make much more efficient use of the limited number of text field properties that are available for use in OneStream. Now let's take a look at what our text property manager looks like in the application. Here you see our comprehensive solution, the text field property manager that centralizes the management of text properties through a single table where the dimension type and text property numbers are primarily defined. The purpose of TPM is to maintain and update text properties for any dimension from one unified location. Another key capability of this solution is updating UD8 members based on the TPM information. The process updates the property name property for UD8 members according to the details defined in the TPM, mainly for reporting purposes. In this way, TPM centralizes all text properties across dimensions, making them easy to manage and maintain. The validation section, on the other end, is used to identify inconsistencies between the TPM and any dimension, making it easier for us to control, detect, and quickly resolve these conflicts. Let's take a look at what our validation report might look like in action. If we jump over to our table where our text field properties have been defined, let's go over to a particular text property for our account dimension, the rate type. Here we can see that in our text property manager, we have defined that for a given account dimension, the rate type property is expected to be found in the first text field of that particular account. Now, what happens if we change that? Let's go over to a random account in our account dimension. Let's say, for example, the acquired software licenses gross carrying amount. As mentioned before, our text property manager is expecting the rate type property to be found in the text1 field. But let's take it out of the text1 field and move it to the text2 field. If I go back to our TPM solution and I run the validation report, you will notice that now the system shows us an error. The system is telling us that for a particular member ID'd over here, the text1 property, which is expected to be in text1 field, is being entered in text2 field. And we have also been mentioned what exact property is under scrutiny. Now, if I go back and change that over to its rightful location according to the TPM, and we refresh the report, you can see that the error has been rectified because now the system can find the text property exactly where it has been defined for it. With that, let's quickly summarize what we saw in our demonstration today. We saw our multi-year end capabilities, which enables entities with different fiscal year ends to load and report locally while automatically converting results to the corporate fiscal year end. We also saw how currency conversion works in our CPM Foundation application, delivering fully property-driven FX translation and CTA calculation with minimal development and full auditability across standards. We also saw two different instances of our same rules engine. One, which is the mappings of profit and loss by nature to by function, where the rules-based engine is used to efficiently map P&L by nature into P&L by function with full diagnostic and reconciliation capabilities. And we saw how the same rules engine approach is applied to reliably map trial balance activity into dynamic cash flow reporting. We also saw our journals capabilities, which provides advanced journal rolling, recurrence, and reversal logic without reposting entries, preserving clarity and audit trail. We took a brief look at our confirmation rules, which simplifies data validation by standardizing our confirmation rules into maintainable and low-code logic. We also went over our UDA definitions, which help surface metadata properties into QViews through standardized dynamic members for consistent reporting. And last but certainly not the least, our text property manager, which centralizes, documents, validates, and governs all text property usage across dimensions from a single control point. With that, we call an end to our demonstration, and the